Hello and welcome to Business on the Wire. We've been talking about the economy at large, but let's drill down to one specific side of it, which is what's happening with the banks. Joining me to talk about that is an economist and an author, Vivek Kaul. I want to use his introduction from his website because that's far more appealing than anything I'm going to say. He writes on economics, finance, and managing your money, he says, in a simple and lucid style. Not everyone agrees with him, especially the stock market wallahs, apparently. And apparently, also, someone recently called him Twitter's most favorite economist. So, a warm welcome to Twitter's most favorite economist, Vivek. Thank you for joining in.
Thanks, Mitali, for having me. I mean, what I was saying is, whoever said that was a kind man, and it just makes for great marketing. So,
Of
I
course
can't
it
deny.
does. And it's a stiff competition, Vivek. So, obviously that meant a lot. I want to talk,
Yeah, of course. I mean,
in more depth about your book and then largely around so many other issues, but specifically on your book, Bad Money Inside the NPA Mess and How It Threatens the Indian Banking System. If you want to hold it up for our viewers, if they'd like
sure.
to read
I
it,
will
please do that.
definitely do that. This is
So that's the book, guys,
book.
available on Amazon as well. Kindle version also available, Vivek?
Kindle, Scribd, Google Books, it's there everywhere. Flipkart, bookstores, whatever you could can think of, the publishers have. So
super. I want to start with a more sort of broader and basic question, Vivek, which is why are economy watchers and economists obsessed with banks and bad loans? Because sometimes I feel that for the general audience, they don't get it. Like they don't understand why people go on and on about saying, okay, this happened to an NPA, whatever an NPA is. What is the problem with this bank? Why is it so important? Why is it sort of the crux almost of what's happening?
Okay. So see, it's so important because it involves all of us. Okay, whether we realize it or we don't. So how does a banking process start? It starts from the fact that I have some money, which I have earned and which I have saved. Now, I have an option of either spending that money that I have saved, or I have the option of going and depositing it in a bank. Now, when I deposit money in a bank, the bank pays me a rate of interest. That rate of interest is essentially the price of money, the price of me not going and spending that money immediately and depositing it in the bank. The bank then takes that money and gives it to someone who needs that money, which is essentially a loan. So this is how the entire financial intermediation process works, wherein those who have give to those who don't. Obviously, everyone a bank lends to won't repay. I mean, there might be issues, there might be lack of intent, for all we know. So that default is essentially a bad loan. Now, economists and economy watchers in general obsess with that number primarily because if the bad loans in the system go up, the entire stability of banks is in question. And if the stability of banks comes into question, the stability of the economy essentially comes into question. It also then sort of creates a doubt in the minds of people, whether they should deposit the money in a bank. If a banking system is you look at what happened with the Yes Bank. Let me give you an example. A more pertinent example. Look at what happened with the Punjab and Maharashtra cooperative, PMC Bank, which was primarily a Mumbai-based bank. The bank sort of has been in a moratorium for a long time. And right now you're allowed to withdraw up to 1 lakh rupees. Okay. You keep getting these stories in Mumbai's tabloids, Mumbai Mirror and the Midday, about how there are families which had their life savings of their lifetime in this bank and are now facing so much pressure. There are people who haven't had operations. There are people who died of heart attacks, even though they had money. Marriages have been called off. So this is how minutely a bank impacts the societal system. So now, obviously, this was a cooperative bank and, things worked out a little differently. Now, look at something like a Yes Bank. Now, the bank was put under a moratorium for a brief period. You could only withdraw 50,000 rupees. Now, imagine during that period, there is a medical emergency and you need that money. Now, what do you do?
What are you going to do?
Where do you go? you can't go and tell a hospital that I have money in the bank and I'll, issue a post-dated check which you can withdraw 3 months later. I mean, it doesn't work like that. So, which is why, the stability of banks is so crucial, because it impacts our everyday lives. And we only realize it when the banks actually become unstable.
What I wanted to ask, Vivek, is what did you find when you started digging for research in your book, both in terms of whether we knew the enormity of the situation, and secondly, whether everybody was in this deep well, or was it, okay, these guys are the bad guys, they're affected worse, or was it just everyone who was suffering with this situation?
So when I started writing this book, the idea was to sort of write a book on crony capitalism.
Okay.
Because that is what one had read in the media, and that's what the prevailing thought was.
Yeah.
But the more I dug up, the more I realized that this is not, the banking crisis is not just about crony capitalism. I mean, obviously, some amount of it was crony capitalism, but it's also about a fundamental fundamental way in which Indian governments use public sector banks. So whenever there is a semblance of an economic crisis, the banks are essentially, public sector banks are encouraged to go out and give loans left, right, and center. And this is done with the intention of essentially pump priming the economy. Now, this is something that happened between 2009 and 2011, when public sector banks essentially ran around with, checkbooks and issued loans left, right, and center without really doing an adequate amount of due diligence. And this essentially started to haunt us from 2011, 2012 onwards. Up until 2015, there was no recognition of the problem. In fact, the RBI tried to help banks to kick the can down the road. And the first, I think, the mention that I saw. The first time I saw RBI talking about it was when Raghuram Rajan, in a speech he gave in November 2014 at Anand, at IRMA in Anand, the Varghese Kurian Memorial Lecture, wherein he talked extensively about this problem, and he talked about all aspects of this problem, including crony capitalism. Now, obviously, the public sector banks were way off the charts when it comes to this problem, and within public sector banks, some of the smaller banks had larger problems than the bigger banks. And the reason for that lies in the fact that I think most of these banks do not have people who can carry out adequate due diligence when it comes to corporate loans. We must remember that corporate loans, especially long-term project loans. So in India, project finance was essentially carried out by developmental financial institutions up until the 90s.
Right.
And then they sort of shut down for whatever reasons. Now, after that, public sector banks took on this role. Now, imagine there are some 3-4 DFIs who are doing this, and now suddenly there are 27 public sector banks. So obviously there was no expertise. So there are a whole host of reasons. In fact, one interesting phenomenon that the stock market wallas would like is that in up until 99-2000, as a proportion of savings, the amount of money that got invested in stocks was huge. But huge in the sense it was much bigger than it was in the later years.
Yeah.
And then what happened was there was the Kitan Parekh scam.
Yeah.
After that, the money that was invested both in stocks as well as in US 64, which used to be the go-to scheme back then, came down dramatically, and all this money ended up with banks. So when banks so this is around 2004-2005. Now banks suddenly saw their balance sheets grow, and they didn't know what to do with that money, and then they went around giving loans which they shouldn't have. So there are a lot of these points which essentially one does not think would be linked to the overall story, but they are.
Especially with the public sector banks, Vivek, I think also that people don't realize that they're bearing the brunt of these decisions, because it plays on your mind saying ye to sarkari bank hai, if push comes to shove, we will be kept safe. Nothing can happen to public sector banks. That's the holy grail in terms of being a safe bet. Is it really like that?
Okay, so I have a slightly nuanced answer for this. Now, I worry when people bank with banks like IDBI Bank, Indian Overseas Bank, Central Bank of India. Now, IDBI Bank is no longer technically a public sector bank. It is a private bank. but then it's owned by the life insurance corporation, so it's as good as a public sector bank.
Yeah.
Uh, Now, my point is this: there used to be 27 public sector banks. Now they are down to 12. Uh, so there are public sector banks out there which have a very low bad loan, not very low, but a comparatively low bad loans ratio, and they give you the same service and they give you the same rate of interest. So why would why would you want to bank with an IDBI bank, where 1/3 of the loans have gone bad, or with other banks where more than 20% of the loans have gone bad? You can get the same service with a public sector bank, which is in a much better position. This is the first point. The second point is, it's not about just about a bank going bust. What if it is put under a moratorium and you need money at that point? So where do you go? So that is a point that people don't seem to realize. The third point is, some of these banks are in such a huge mess. What if the government decides not to save them? I mean, it hasn't happened, but that does not mean it can't happen. Just because something hasn't happened in the past, it will not happen in the future is a bad way of is a very bad way of handling your money. So my limited point here is that there are banks which are giving you the same rate of interest. They are in a much better position. I mean, just move your money to those banks.
Hmm. Which brings us to the here and now. Recently, a couple of days back, the Reserve Bank governor was speaking, Vivek, and he said, I don't want the same situation we had for banks and, these bad loans 5 years back. But we've also had in 2020 this 1-2 punch of COVID. What's your estimation of what the situation is right now? I know banks are now far more reticent in terms of giving out loans, but just on this bad loan situation, do you think it's worse or the same or better?
No, it will obviously be worse.
Yeah.
So see, we anyway had bad loans of 8 to 9 lakh crore. Okay. On top of that, there are restructured loans of real estate companies, power companies, which are basically bad loans.
Yeah.
So we are somewhere around 10-11 lakh crore. I mean, if you were to sort of, what in Hindi we call mota terms. So 10-11 lakh crore of bad loans, which is around 10 to 11% of, your overall loans that banks have given out. On top of that, you will now have a situation where businesses obviously will default, so the smaller ones, and a lot of retail crowd will default. So it depends on how this entire situation plays out. So right now, what has happened is, thanks to the moratorium, we really don't know how bad the situation is, because people generally who are not in a position to repay haven't been declared as defaulters. So only once the Supreme Court decision comes and there is clarity on how the interest that has sort of accumulated during the moratorium will be treated, will we eventually come to know as to how bad the situation is. Also, you need to keep in mind the fact that a loan is declared as a bad loan only after the default period is 90 days or more, right? So let's say if we start as of 1st October, then after December 31st, that's like 1st January on, bad loans will start accumulating. So for the results of that will be for the January to March period. So the results will come out in May, June next year. So we won't, it'll at least take us 8 to 9 months to figure out the real situation of how bad the bad loan situation is.
You're saying the stock market wallas and their Excel sheets are not doing this right, Vivek? They're not calculating the damage.
No, I mean, see, the problem is, most of the stock analysts are, work for brokerages. So the job of brokerages is not to tell you how bad a company, how bad a company's situation is. Their job is to go out and sell the stock.
Yeah.
So only when you buy the stock do they make money. So
yeah, no, absolutely. Was there a sort of a crest and a fall in this situation when you saw it? You and I were chatting and you were saying that in your book you have a thank you to Nirav Modi. Was that sort of the time when everything basically exploded in everyone's faces?
Yeah. So basically, the Nirav Modi story essentially, it was obviously, I was saying that with a lot of sarcasm.
Yeah.
What happened? Yeah, what happened was that I was in Pune. I mean, I'd gone there to teach a journalism class, and journalism class at Symbiosis University. So the Symbiosis University is built on a hill. Okay, it's a beautiful campus,
Yes.
and their guest house is on top of the hill. Okay. So I was sort of in a car and I was being driven up the hill, and suddenly I get a call from Noida, of all the places, and someone starts talking in chaste Hindi, which I'm not used to hearing, being in Bombay. And he says, "Mahoday, आपसे एक public sector banks पर एक piece चाहिए था," or something like that. So I was like, public sector bank. अचानक, why are they suddenly remembering public sector banks? Because up until then, public sector banks had already accumulated bad loans of 8 lakh crore. Okay.
Yeah.
And then I realized what had happened was that around 2 weeks back, the entire Nirav Modi story had come out. Okay. And it had essentially been splashed on the front pages of even the language newspapers all across India, because the problem is there is a story, and there is a story which you can link to someone. Okay, so in economics there is this concept of identified life and statistical life. Okay, 2,000 people getting COVID, or 2 lakh people getting COVID is not an issue, but the moment Amitabh Bachchan gets COVID, that's the story. 2 lakh people getting COVID is not the story, but Amitabh Bachchan getting COVID is the story. So similarly, 8 lakh crore of defaults don't matter. But here is a guy, a guy who makes diamonds, is friends with Priyanka Chopra, and has sort of defrauded Punjab National Bank of almost 13,000 crores, $2 billion. So suddenly everyone sort of started to realize that there is a problem. Ki public sector banks mein bhi paisa safe nahi hai. So that is why I sort of ended up, that's where the thank you note came from, because essentially Nirav Modi helped people realize that there is a problem. Up until then, it was just about there. Because, when Vijay Mallya had sort of run off in 2016, the process of recognition of bad loans had just started. So it was at, 1.5, 2 lakh crore. So 2 lakh crore mein maza nahi aa raha tha. But so until it reached 8 lakh crore and the fraud of Nirav Modi came out, then things started to become interesting, at least for the language media.
So even if it was long-term project loans, though, Vivek, does it still circle back to the point you were making about crony capitalism? Because that, I think that's what leaves a bitter taste in the mouth for people who are watching this situation, saying the big guys always get away, but if I were a retail and I defaulted on a loan, there are consequences for me, and serious ones.
So yes, obviously a lot of it was crony capitalism, but a lot of defaults that happen at the SME level, or even at the medium businesses, not the very big ones and not the very small ones, somewhere in between. They were genuine defaults wherein people had taken on loans, their businesses had, and the expansion had not happened because of a whole host of regulations that India has. Everything from the process of acquiring land, environmental clearances, and so on and so forth. So a lot of businesses were stuck with that. And then there were, the likes of Bhushan Steel and the biggest of the lot, who obviously, there was the intent was not to sort of repay. But the good thing that has happened, and people don't talk about it enough, is the fact that the Insolvency and Bankruptcy Code, at least until it was allowed to work, did help in recovering some of that money. Now Bhushan Steel is no longer with Bhushan Steel, it's with Tata Steel. SR is with Arcelor. Now, obviously, there are other points there as to the steel cycle was on an upswing and all that. But ultimately, the fear, more than the implementation of IBC, the fear of getting into IBC has worked. And a lot of people who wouldn't have otherwise repaid have ended up repaying banks. So I think IBC gets a lot of flack because there are a lot of things which are wrong with it. I'm not trying to defend it, and a lot of companies which go to IBC are not sold; they get liquidated, and the system of liquidation in India doesn't exist. So essentially, banks end up with nothing. But if you look at some of the big cases, a lot of more than 80% recovery in SR, 65% in Bhushan Steel. These are not small numbers. So you have to give the loss some credit.
To use your own phraseology, though, Vivek, are we mota still on the same path? Because the feeling is that IBC is slowly but surely being just shifted to the side. Whether you're moving sectors like power out, which is where the big defaults are, then you have the KV Kamath recommendations again. Are we shifting away from that, or are we still largely on the same path of resolution?
No. We are shifting away from that, and we have been shifting away from that. I mean, look at the way the real estate sector has been handled with all the kids' gloves. I mean, I don't see any reason as to why they should their loan should be restructured. I mean, it's high time they start repaying, and they have the assets. It's just that they need to cut prices, and which is where the entire thing is stuck. I mean, they don't want to cut prices. So
Yeah. Let me shift from banks to the here and now, because we have a very big here and now economic situation, Vivek. There has been some criticism amongst the economic community, at least, on how things were handled. But I want to ask you, what is your own perception of what's happening here? Because you analyzed the union budget and we saw the flaws in that. Then came COVID and came the relief measures. Again, there were flaws in that. With the current government, is there a gap between knowledge and intent, or is it that there is just no intent?
okay, I mean, I think the first point that I will make here is that we were already in a sort of an economic mess before COVID struck.
Yeah.
And which has made the situation worse, because it has limited the kind of things that the government would have otherwise been able to do. If the economy was in a healthy state, the government would have probably been able to do a few more things. But we were already in a mess. So that's the first part. The second part is, I think, I wouldn't say there is no knowledge. I mean, that would be like taking it too far. But yes, I mean, the lack of intent has always been a question. Also, I think, and this is an important point which sort of keeps getting lost, is the fact that this government is more interested in managing perception of its performance than real performance. I mean, so take a look at something like the Toyota controversy recently, where one vice chairman came out and said we are not expanding, and by the end of the day, another vice chairman had come and said no, but we are expanding.
Of course we are.
I mean, but then see, the point is, the bigger issue there is that there is a problem. If you look at GST, you look at the other taxes that the automobile buyer has to end up paying, it does make the entire thing expensive. And 50% of manufacturing in India is automobiles. So it is a big sector, and there is a problem, and there is no harm in talking it out. I mean, Toyota or no Toyota.
Yeah.
Because ultimately what will happen is, if the sector does well, the economy does well, and the credit for the economy doing well doesn't go to Mitali Mukherjee or Vivek Kaul, right? It goes to Nirav Modi and the finance minister Nirmala Sitharaman. So I think that is, they are so obsessed with managing perception that everything else, even when the intentions are right, ends up taking a backseat.
I do feel also, though, Vivek, and I want to, tap into your thoughts on this, that in this particular situation related to the economy, if the government is answerable, I feel like corporate India is equally responsible and culpable for this mess, where, when you had the opportunity to speak truth to the establishment, or to, put out a situation as is, you didn't do it. You worked from a very, very narrow prism, whether it was in terms of cutting down corporate taxes, which did nothing to actually increase or encourage consumption, because you were just basically saving your P&L. Do you not think that it's been a big fall from grace for corporate India as well in these last few years, where they just don't tell it like it is?
Yeah, I mean, that's like I don't find it surprising, honestly. So if you look at the corporate tax cut, that was one part. Yeah. Now, if you look at what has been happening in the last few days, the narrative is now shifted to essentially killing the Monetary Policy Committee and its focus on inflation. Because corporate India loves inflation. It helps boost their balance sheets, and it also helps in bringing down the real value of the loans they have taken on. Yeah. So, you look at, next 3 to 4 months up until the end of the year, I will not be surprised when you will see, random elements who have nothing to do with the country's monetary policy come out and talk about the fact that, India needs to move on from this inflation focus, and we need to have, focus on multiple things, and so on and so forth. So that is a problem. I mean, corporate India, for all its, they are basically weak guys. So.
Yeah.
And I mean, it's not like, see, it's like, in India we have so many regulations, so many laws. The fact that you are still in business means that at some point of time, without even knowing, you might have broken some law somewhere. So every corporate guy is in an extremely vulnerable position. I mean, no corporate guy can say that 100% confidence that I have never done anything wrong
Yeah.
in my life,
Yeah.
because even without him knowing, he might have broken some law somewhere. I mean, for all we know, he might not have maintained a register at his factory which essentially notes the days on which whitewashing was carried out. I mean, there are laws like that. So
What about solutions, Vivek? Because, like you said, Mitali Mukherjee and Vivek are not sitting here to criticize the government. I mean, they're probably doing what they can, and it's not for us to sit and just count out the negatives. What about solutions? Because I think the other thing that is deeply disturbing about this year is how it has accentuated the gap between the haves and the have-nots. Really pushed such a significant part of India back into the situation of poverty that they were in. So I think let's talk about that.
right. So I'll talk something. I mean, I like to give a personal example here.
Yeah.
And when the food security bill first came out and it was passed, and there was a lot of criticism in and around it, right? And I mean, and I remember I wrote a piece for First Post, and it went like viral beyond belief, and I was extremely critical of what was happening. And but now 6, 7, 8 years later, one sees that it's the Mahatma Gandhi National Rural Employment Guarantee Scheme, the food security law. I mean, these are the things which are essentially helped in alleviating pain to some extent, right? So that's the thing. That's the irony of it all. You never really know what's going to work and what's not going to work.
Yeah.
Talking about solutions. I think it's important right now to more than having solutions which work quickly. I mean, we would all love solutions to work quickly. We need to have reforms which essentially show that the government has intent to reform, right? I mean, so one of the things that I've talked about extensively is the fact that obviously the government needs to increase its revenue envelope, right? I mean, from the kind of money it has been making and from the sources that it has been making. So one of the things that I have talked about is the fact that a lot of public sector enterprises have a massive amount of land, okay, and land that is lying unused and in middle of cities. So that land, I mean, I know it is not easy to sort of, it's not like, it's not like an individual home which can be put on sale one day and sold the other day. I understand that. But then, the process of inventorizing that land, the process of valuing that land, that needs to start. And then there has to be this huge land bank which has to be created, and that has to be sold gradually over a period of time. So that can be a huge revenue earner for the government. Now, to give you a very specific example on this, I come from the city of Ranchi, and Ranchi now has run out of land. Okay, now unless it sort of keeps, extending way beyond where it is. The only place in Ranchi which has land is Heavy Engineering Corporation, which is towards one end of the city, and it is a city in itself. And the amount of land there, mind-boggling. It's just lying empty. So so I'm sure there are so many such other examples all across the country. From half a kilometer from where I live is the Bicycle Corporation of India, which has been lying idle for the last 15 years. I mean, I've walked past it for the last 15 years. I haven't seen anything but a board saying, IS officer so and so and people trees. So why is that company still there? So that intent has to come in. The second, as Dr. Raghuram Rajan put it in a recent note, public sector enterprises, stake in public sector enterprises needs to be sold on tap, which basically means every time there is some sort of a rally, you sell 1%, 2%, something like that. The third thing that I think that can have immediate effect is that the GST on the automobile industry needs to be cut, because this can have tremendous multiplier effect, and the multiplier effect will sort of steep in very, very quickly. Steel, rubber, plastic. One can go on.
These are big.
That is.
So yeah, absolutely.
Yeah, I mean, it's just got The fourth thing that I think is necessary now is that, and I mean I didn't think I would be ever saying this, is we need an urban version of Narika. I mean, that is very, very clear. Obviously, it's not something that can be launched overnight. It will take time. Systems will have to be built. For all we know, some sort of a law might also have to be passed. Uh, and I think, one of the things that I really believe in is that if this country, if we have to go back to growing at 7-8%, we need to really do something about our real estate sector. Because real estate and construction, if you look at the history of economic development across the world, when countries have gone from being developing countries to developed countries, construction and real estate have played a major role. And they have played a major role because construction and real estate essentially help moving people away from agriculture. Agriculture in India has huge disguised unemployment. You have 43% of the workforce and 60% of the rural workforce in agriculture, and it's sort of it's around 15 to 16% of the economic output. So there is huge disguised unemployment. These people need to be moved away from agriculture, not forcefully, and for that you need to create employment in sectors like real estate and construction, where a lot of low skill jobs, semi skilled jobs can be on offer. Now, for this to happen, sadly, real estate prices need to fall. And for real estate prices, if they have to fall, the restructuring of loans has to stop. Some real estate companies need to go bankrupt. Banks need to take a lot of hits. They need to be able to figure out as to how to sell the collateral they have. So these are difficult decisions. I mean, these are not decisions that politicians would want to make. So.
Yeah. But it's only when your back is against the wall that you make difficult decisions. And I think our back is very firmly against the wall. One final take from you, Vivek. And if the News Laundry guys are watching, guys, this is inspired by you. I'm sorry, please indulge me. I don't get to do this very often. But why don't you share with people who are watching, Vivek, something that you recommend in terms of reading or watching? Because I know you're a voracious reader. You really enjoy music. So is there something you want to share?
So I can tell you, I have heard almost all music that I could possibly do in the last 6 months. From Lal Dupatte Wali, Tera Naam To Bata to Bob Dylan, to you can name it, and I've heard it. But I sort of and I discovered a few good musicians along the way. Ones which I hadn't heard of earlier. So there is a Canadian, guy called Gordon Lighthouse.
Okay.
Someone. Let me just see if I'm if I'm getting his. I mean, I hope I don't get his name wrong. Gordon. Sorry, it's not Lighthouse. It's Lightfoot. So Gordon Lightfoot is a Canadian singer, same age as Bob Dylan. Sings in the same baritone, deep baritone voice as Bob Dylan, but sings more about love than what Dylan sings about. So he is a guy I have sort of been hearing on loop for a long time. In fact, my father would be happy to know this, and I've also been listening to a lot of Kundan Lal Sehgal. So that's the the range, because you get bored. So books. I have. I've sort. I've not been able to read a lot of non-fiction. It's just that that concentration is missing. But I do read a lot of crime fiction, and I would like to recommend the last 4 crime books that I have read, and all of them have been superb. One is Moonflower Murders by Anthony Horowitz. The second is called 8 Detectives. I've forgotten the name of the author, but it's called 8 Detectives. The third one's called The Nothing Man. Again, I've forgotten the name of the author. And there is a fourth one. Okay, I'll have to sort of look up the name. I'm sorry.
No problem.
Forgotten the name. Anyway, let's. 3 is good enough, I guess. So
if anyone's listening, I certainly am. I'm a big crime fiction fan as well. So I'm going to look up all these names. Vivek, thank you so much. It's always such a pleasure chatting with you. And for everyone watching,
same here, Mitali.
For anyone watching who'd like to get a copy of Vivek's book, as he pointed out, it's available on pretty much every platform. And I think it would make for a great read. Thank you, Vivek. Thanks very much.
Thanks, Mitali, for having me. Thank you.
To receive instant updates on all videos from The Wire, click the subscribe button and hit the bell icon. Pay to support independent journalism. Click the link in the description and choose the amount you want to pay.